Hello, this is Brian Shannon from AlphaTrends.net. Today is Friday, May 30th, 2008. The market's closed for the day and the week and the month. And for the month, the S&P 500 finished with a gain of 1.4%. The year-to-date is now down 4%. The biggest winner this month of these groups that we look at was the semiconductors, and they're still positive for the year. I guess I got to change the colors in there because they were up today as well. The financials, obviously, they were the weakest, down 6.5% for the month and 14% for the year. The NASDAQ, though, is just down 2% for the year after having a good month here, 5.9%, and hopefully you've had a good month as well. The S&P 500 today continues to kind of just move around a little bit here right next to that conjunction of the 10 and 20-day moving averages that we've been looking at, and that's right at about 140.5 or so where we find those moving averages right now. As we know, we're also below the declining trend line here and the declining 200-day moving average, which fall into a important level on this longer-term weekly time frame. So we still have to be very cautious about the longer term, and I've been saying that for a while, but we've just been kind of stuck underneath this level, and it's not clear yet whether the buyers are going to have the power to push it back up above this line, or really above 145 or so, or if we're going to see another leg lower. So until we have further clarity from the market, it just doesn't make sense to make these big, bold market calls. Right now on the S&P 500, we have the potential that we're forming a lower high here, and if we break below this week's lows near 137 or so, then I think that things could get a lot worse down towards this 132, 133 level. So still a lot of reasons for caution. On the 30-minute time frame, we do see here that the market just kind of traded pretty much in a flat range here today. We've got a rising 5-day moving average. That's a positive here for this market right now, and getting back above 141 is where the current currently where we've been finding some sellers in this market. So above 141 would maybe lead to another little push higher that maybe gets it up towards this 142 level, and we'll see if the market can build from there. But for now, the short-term level of important support is right here near this 140 level. Breaking below there, then I think we're probably in for a test of the 5-day moving average. It's nice to see that this 5-day moving average is now flattened out to starting to head higher as well. So that's important. As I said yesterday, this level here, and this is approximately where we're going to find that 5-day moving average, on Monday. This prior level of support, which offered the resistance early in the week, and that's where we saw the bulk of the gains come from that move, just above that 139.25 level. So 139.25, we've got 140 as a support area, hopefully, that holds this market higher. If that fails, I think we go quickly down to 139.25. And again, the more important level is about 137.75. That's the lows basically for the week. And that's an area that if it breaks below that, then we might be putting in this head and shoulders top still in here, or just just turning slightly lower. So got to still be careful overall, because we still have those mixed messages from the market. The IWM finished with a gain today of 26 cents. I've got another one of those bad ticks in here. I don't know what the actual high was today, but it looks like the high was right around near the close, but obviously didn't get up towards that $78 level. Let me just change the scaling in here so we can see this a little bit more clearly, and just ignore everything above that purple line. Basically, we have the potential that the market's making a lower high here, so that adds a little significance to 74.20 or so. Below that, 73.50 I think is a potential area of support. It's actually let me take that back, about 73.60. That's the level of resistance that this market broke past on Thursday, and that's where we saw the bulk of the gains yesterday come after the move above that level with these higher lows and higher highs. We still have this higher low, so until the market breaks below here, there's no reason to be selling this market short if that's what you're looking to do. The market closed above the 200-day moving average, so that's important because that's the first time that that's happened in, basically since, well, it looks like way back here in about October of last year or so. So on a weekly basis, the last time we saw a weekly close above the 200-day moving average in the Russell was October of last year. Now the direction of that 200-day moving average is still lower, and it is still potentially in this area where more supply will be released to the market as prior support tends to act as resistance. So we can't just look at that, because it's above the 200-day moving average as a run out and buy signal. The direction of the 200-day moving average is still lower, and more importantly is this longer term level of prior support that was broken in here, which has the potential to still offer supply to this market. It could send it to a new leg lower. But for now, there's no signs of any deterioration in this market. I think breaking below 74.20, 74.15, then you want to raise your alert level a little bit here and become a little bit more defensive. The financials, again, this is the weakest group, and they're slowly bouncing in here. I mean, there's nothing bullish, though. There's resistance probably to be found right up above at about 25.5, and then remember that 26.20 level was important for a long time. But that's where we've got the 50-day moving average again. Now we've got the 10-day moving average below the 20, below the 50 again. And just to take a look at another group that looked like maybe after years that they were bottoming out, and that's these home builders. It looked like maybe they were bottoming out here just about 3 or 4 weeks ago, but you can see this market failed to break out in here, and it's just been slowly grinding lower, making these lower highs and lower lows. Now we've got once again some panicky selling, and it looks like this is still set up pretty bearishly. That is the home builders, perhaps heading down to test these lows from the March area. And with the financials and the home builders, it's still in terrible shape. The financials, you want to keep an eye on that 24.40, 24.30 level. Getting below that and holding below that is going to represent bigger problems. They could be the motivating factor for further selling from the S&P 500. So again, just a lot of mixed messages. Good time to have your alert up high, because we could get some unexpected panicky moves in this area. The pillar of strength in this market is the NASDAQ 100. Once again, coming back up to this 2/3 retracement level from the November highs down to the March lows. So here's 38.2%, 50%, and 61.8% retracement levels. And by the way, that's not a subject in the book, but it is a subject that I will do an educational video on to put in the bonus tab for book buyers at technicalanalysisbook.com. So I'll be doing educational videos only for the book buyers on that subject, maybe even pivots, and of course getting feedback and expanding upon subjects that arise from the people who have questions. Books will be shipped out next Saturday, so a week from tomorrow. And I'm going to extend, if you want it autographed, I'm going to extend that out to the 11th of June rather. That way, if you're going to buy one for your father for Father's Day on the 15th, you can have it autographed as well if that's important to you. The NASDAQ 100, though, again, we were looking at the potential only for a head and shoulders top in here, and I said you don't want to trade that pattern until you have price confirmation. We want to anticipate all potential scenarios and plan for anything, and never expect our plan to take place based on a one-dimensional view, such as the market has to be tracing out the shoulder, I'm going to sell it short. You anticipate all scenarios and only react once the market confirms what you're looking at, because clearly if you've been selling short the NASDAQ this week, you've been wrong, except for maybe, I don't know, 10 minutes today, a couple people who sold up in this area. Basically, though, we've still got a very nice solid uptrend in here. It's very encouraging that the market's found support at that 200-day moving average. 48 is, 47.75, 48 is a key level for this market. It'll be interesting to see if people are going to call this a double top. Right now, there's no evidence of a double top. A double top occurs if we're going to see one. First, you see a breaking of the trend line. Then you see a breaking of the support level at 48. Then you would look for the height of that pattern subtracted from the breakdown point, and that will give you a price objective just like that. So we take that height. It's not there yet, though. I was just kind of showing you how to measure double top. That is a potential price objective. But right now, solid uptrend here. Really, this market made it past some key resistance right in here. And we've had this nice pattern of higher highs and higher lows. The market leapt above that 5-day moving average, consolidated in here, and yesterday it got going firmly. And today, we had a further continuation, grind higher. It hasn't made a higher high yet. Let's see if it does. 50.5 will be an important level. If we see weakness next week, I think that initially you're going to see the bulls defend this market down near about 49. Let's just call it 49.25. That's about where we'll see that 5-day moving average. But there's no sign of deterioration in this trend right now. So the NASDAQ 100 again is clearly the strongest of the major groups. And just real quickly, I did notice though today, and I really don't look at it very often, but the Dow is looking pretty weak relatively as it's coming up to this prior important level. And this is, if we even extend it back to here, we can see that this level at, and these are the diamonds, the ETF that track the Dow Jones Industrials, 127.5 had been important resistance. That resistance was tested as support here once, twice. It broke down through it. Now it's rallying up to there. And if this market, if the Dow starts falling apart from here, it just looks like a classic little bearish flag, really. So another reason, that is the Dow, to be very careful in this market. This is that major level similar to where we are in the S&P 500. And we've got this support acted as resistance right there, and now as a looking at a fractal, this prior support is now acting as resistance once again. If it can get above here, I think the bulls can breathe a little bit easier if it gets above and holds above 127.5. But longer term trend is still showing trouble in here. So be very cautious next week, I think.